Welcome back, everybody. I am going to be starting a new series on this channel where I discuss the bare basics of the stock market, and this is going to really be catered to those people who know absolutely nothing about the stock market. So make sure you guys leave comments down below on what information you guys want next, and I hope you enjoyed this series. So without further ado, let's go ahead and dive right on into it. Welcome back, everybody. I hope you enjoyed that beautiful intro. So I hope you guys are ready to learn about the stock market. Go grab a snack, get comfy, and let's go ahead and dive right on into it. So first, what is the stock market? Okay, well, to make it very, very simple, a company such as Apple is going to release stock. Now, a stock in the company, just think about it for very, very simplicity. Think that you have a pie, okay? Now, when you have a pie, you can cut up the pie into slices. So think that you have a company. Just like how you could cut up the pie into slices, you can cut up the company into slices. Now you could either cut up the pie very, 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 very small, where each sliver is like this big. Same thing with the company. You could cut it up very, very small, where each sliver is this big. Or you could cut up the pie very big, where each sliver is like 1/4 of the pie. So that's basically the shares of the company. You could either have a lot of shares in the company, or you could either have a little shares in the company. Basically, each slice of the pie is a share in the company. So, okay, now that we know what the pie is, what is a share then? All right, so I said that each slice of the pie is a share in the company. So then what is a share? Well, a share is basically a part of the company. You own a part of Apple. So if you buy a share in Apple, you own a part of Apple. Now, granted, that's going to be like 0.0000000 something if you own like one share or even 10 shares. Like, realistically, you have to own a lot of shares to own a majority of Apple because the pie is cut very small. But nonetheless, you still own a share in Apple, even though the pie slice might be this small. So you own a share in a company, which means you are now part owner of that company. Now, we understand what the stock market is and what the shares are in the pie, right? Because obviously the stock market is just going to be this list of all the stocks you can now become part owner in. So now that we understand what the stock market is and what a share is, well, how do you place the different types of orders? Now, this is very important. Don't get too bogged up in these different orders. There are going to be a lot of orders in some brokerages like TD. They'll give you like 5 different order sets. You only need to focus on limit and market. And I will do hopefully future videos on which brokerage if you guys want to set up, because there are a wide variety of brokerages which offer different type of benefits. So I'll definitely cover which brokerage might be the best for you. And let me know what you guys also want down below in the comments. So there's going to be 2 different types of orders. You're going to have the limit order or the market order. The limit order basically says, I want the stock, but at this price. So imagine you have a stock of Apple trading at $100. I want the stock of Apple, but I'm only willing to pay $95. So you would place a limit order at $95. So if the stock of Apple were to drop from $100 to $95, your limit order would be executed. Now, the only problem with that is that imagine Apple goes from 100 to 102, then 104, then 105, then 106. You might not ever get your position filled. And that's why it could be smart to maybe do the limit gap smaller than, for example, $5. So maybe put the limit at 99 instead of 100. Now, you could also do a market order. The market order basically says, I want the stock of Apple now. I don't care what price it is, I want it now. So if the stock of Apple is at 100, you'll pick it up at 100. If it's at 102, you'll buy it at 102. If it's at 104, you'll buy it at 104. Same thing goes for selling. So imagine you have a stock of Apple and you have it for 120 and you only want to sell if it reaches 130. You could put that limit order and be like, I'll only sell if my stock of Apple reaches 130. That's $10 gains. Let's go. Warren Buffett. You could do that. But if you put the limit at 130 and it never reaches 130, it won't sell. But if it does reach 130 and when it reaches 130, it will sell. So if you have a stock of Apple at 120 and you put the limit to be at 130, once the stock price reaches 130, it will sell. For market, however, you'll sell no matter what that price is currently. So if you have the stock at 120 and the price of Apple currently is at 130, then if you put the market order, it will sell right away. So if it's at 130, you'll sell at 130. If it's at 140, you'll sell at 140. If it's down and you bought it at 120, now it's at 110, and you put a market order to sell, it'll sell right away at that 110. So that's the difference between limit and market. Okay, so now that we have the two different types of orders down, as well as what a stock is and what is a share, let's talk about candlesticks. Now, I don't want to make this too long because obviously I don't want you guys to get bogged down with too much information. So I'll definitely reiterate more on candlesticks, and we'll do more examples next time where I'll actually show you guys a chart so you understand the candlesticks. But this is going to really help you encompass everything so far simply about the stock market. So you have two different types of candlesticks. Whenever you guys look at a chart and you see, for example, Apple's chart, you'll see that some candlesticks are green, some candlesticks are red. Now, there's different types of candlesticks, and that's it. There's only the green and red. You won't really see an orange or a purple or a yellow. It's only going to be a green candlestick or a red candlestick. You're not going to see any other color. Now, when you look at the green candlestick, you're going to have, this is called a candlestick because it looks like the body, right? This is the body, and then you have the candle wick. So this is exactly what it's called. So this part is going to be the body, and this top part that you see coming out of the candlestick is going to be called the wick. So this is a wick, and this is a wick. Likewise, on the red thing, the red candlestick, this is the body of the red candlestick, the wick, and the wick. So basically, what does this mean? This whole thing is just showing you the price action of that stock for the day. So each candlestick is going to represent a time period. If you are looking at the daily chart of a stock, that means you're looking at each candlestick represents 1 day. If you're looking at the minute, each candlestick represents 1 minute. You're looking at the weekly, each candlestick represents 1 week. So when you're looking at the green candlestick, when it's like this, the open will be the bottom of the body, right? Because it's a green candlestick, that means the price increased for that time frame. So let's just work with the day to be easier. So if we're looking at the day chart and we see a green candlestick, that means that candlestick represents 1 day. And that means for the day, the price had increased since it's a green candlestick. Likewise, if we were looking at the chart of Apple and we see a red candlestick, that means for that day, Apple's price decreased. So when we're looking at the chart, or for example, a candlestick right now, we see that there's a green candlestick. So when you're looking at the green candlestick, the bottom of the body, so right here, is going to be when the candle opened. So that's the open price for the day. The top of the body is going to be the close. That is where the price closed. So this is for the green candlestick. So when you're looking at the green candlestick, the open was the bottom of the body, the close was the top of the body, because remember, the green candlestick means we increase price for that day. So it obviously makes sense for the open to be lower than the close. When you're looking at the green candlestick as well, the wick, the bottom of the wick will be the low. That means that day, the price reached that low for the day. And then likewise, for the top of the wick over here, that was the high of the day. So the wicks are going to show you the high and the low of the day, while the body is going to show you the open and the close for the green candlestick. Now let's take a look at the red candlestick. Let me move myself here so you guys can see. So at the red candlestick, the wicks are still going to be the exact same. For both the green and the red, the low of the wick is going to be the low of the day. The high of the wick is going to be the high of the day. I hope that makes it easier for you because the wicks are going to represent the same thing on both the green and the red candlesticks. But the difference between the red candlestick and the green candlestick is that the top of the body is going to be the open and the bottom of the body is going to be the close. Remember, because a red candlestick means we lost, it dropped, the price dropped. So it would make sense that the open is higher than the close. Why? Because that means the price dropped. Well, for the green candlestick, the open will be lower than the close because the price increased that day. So that's basically how to do candlesticks. If you found that confusing, don't worry, I'm going to rediscuss this in the next video. I hope you guys found this educational and enjoyable. Let me know other questions that you guys want me to discuss, and don't worry, if all of this was confusing, I'm going to reiterate it next video and even give examples for the candlesticks, so don't worry if this is confusing at the moment. I hope you guys found this educational and enjoyable. Don't forget to smash that like button, join my Discord down below, and I'll see you guys next time.